Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, I tell.
All right. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you are in the right place if you've got questions and you want answers. I mean, questions about real estate and mortgage. What are these crazy interest rates going to do to the housing market? Are these rates really crazy, or were the 3% rates the crazy ones? We're going to cover all that. I mean, a lot of people are wondering right now, what's happening next? What's the next shoe to drop? Is it a good time to buy? Is it a good time to sell? Should I just give up on all of this, buy a van and park it down by the river? Like that old Chris Farley skit, and live in that doggone van. I get it. It's confusing. It's frustrating. And if you have questions, you're in the right place. We are going to give you the data, the tips, the tricks, the strategies, the real information, not the headlines, that you need to make better real estate and mortgage decisions for you and your family. We are super excited to have you with us. We appreciate you. We do this each week right here, same time, same station. And I am joined, as always, by my lovely producer, Jennifer, who is womanning the Anytime Hotline. She will get your questions on the air. You can get those to us by calling 855-462-7292 or text. Call or text that number, 855-462-7292. She'll get you on the air. Hey, but before we get started, I guess let me check in with you, Jen. I know it's been a wild week. You okay?
It's been a crazy week.
A crazy week indeed. Well, I'm super excited that you're with us. I appreciate you being here. I know the last couple of days have been very, very stressful. We kind of dodged a bullet here in our home territory, if you will. But the storm is still working its way up the coast or up the state. And we have listeners all over the state. We have clients and referral partners all over the state. So Jen has been helping me, and we've been calling and checking in with our clients and our referral partners. And I'm super surprised to learn how many people are just uncertain with what happens next. And I want to encourage all of us, because there are new Floridians in all of our neighborhoods. We've recently had a large influx of new residents to our state because of COVID, because of the economy, work from home, all of that remote opportunity, and people packed up and headed on down. And, you know, I'm glad they're here. But the reality is a lot of them had no idea what preparing for a storm and riding a storm out was going to be like. And now I know, just from the conversations I've had, there's a lot of uncertainty about what happens next. So guys, if you have new residents in your neighborhood, just knock on their door, check on them, make sure they're okay, let them know that they're going to be fine, let them know that there's resources available. Encourage them. If you can give them some guidance and direct them to where to get fuel, where to get ice, you know, what happens next. I know over here in the, the PSL footprint, if you will, of the station signal, a lot of us made it through okay. You know, I was surprised to see the tornadoes. I wasn't expecting that. I know some neighborhoods in Palm Beach County suffered some pretty decent damage. I saw some cars piled up upside down on one another, and then there was a small airport down in Boca, and we're still seeing news reports, some damage around us too, but you know, we're blessed. We dodged a bullet, and I think it's up to us to just kind of encourage those around us, be a resource. If there's an older lady or gentleman, single person in that house across the street, just go over and knock on the door and see if there's anything they need, and just make sure they've made it through okay. But here's where I'm going with this. In my conversations, I'm finding that a lot of people don't know what happens next, because the reality is prepping for a storm is pure adrenaline. I mean, you are hyper-focused. You're elbowing your way through Home Depot or Lowe's or Ace Hardware, and you're gathering everything you need. And you get home and you batten down the hatches, and you might make a run over to Wawa or Racetrack at, midnight, because not everybody's going to be out fueling up. So you got the empty 5 gallons worth of gas fueled up. All the cars are filled up. You got the beanie weenies and the SpaghettiOs and the bottled water, and you're set. And you get in the house, and that first feeder band comes through, and the shutters start rattling, and you hear things banging around out there. and you just kind of collapse with exhaustion. And you may or may not fall asleep, but then you're rudely awakened to a 90-degree temperature because the electricity's been out for the last hour, or you hear something rattling around on the roof and you're thinking, oh my God, there goes my roof. A couple tiles are blowing off. If you've been through the storms in the past, you know exactly what I'm talking about. But here's the thing, the new folks don't. And then they come out from hibernation. The storm's over and you crack the door and that first ray of light hits you in the eyes and you kind of, you're squinting your way through it and you, oh my God, my trees are down, my fence is over, the neighbor's carport blew off and it's leaning against my car. That's when the real uncertainty, what do I do now? Who do I call? How do I get this? How do I make an insurance claim? When is the power going to come back on? If you're on well and septic, you may be without water. It could be 3 days. It could be 3 weeks. I mean, we've had people go longer than that because of some damage that was sustained during a hurricane. So this is the part moving forward where I really think we can kind of lean on each other, if for nothing else, just to give your neighbors some encouragement and some guidance. So we're doing that. We're reaching out to everybody. I encourage you to do that. Hey, if you're listening to my voice right now and you're in need, you need a landscaper to come cut down some trees and pull them out. You need a handyman to, nail some things back down to the roof, or to, here's something a lot of people overlook. Call the real estate agent who either sold you the house or represented you. You would be super surprised to learn what resources a seasoned agent has, because over the years, they've had to refer somebody out, a handyman, an electrician, a roofing contractor. Your local real estate professional can be an amazing resource right now, so do not hesitate to call them. If they don't know someone, you can call the Realtors Association of your county and ask them if there are any affiliate members in those categories that you're looking for. And they may have access to vetted contractors through their affiliate member network. And if you're not having any luck, call us. Call or text us, 855-462-7292. That's the Anytime hotline. When Jen and I are not in the studio, that rings to my office. Call or text that number, and I've got a very, very extensive network of real estate professionals who we've worked with over the years, and I'll reach out to them. I'll send a broadcast message out to the network and just say, guys, we're looking for a electrical contractor in Citrus County. I don't know, a handyman in the Tampa area. If you're in wherever you are and whatever you need, if there is something we can do to put you in touch with the right person, we're happy to do it. Right now, today, everybody's a Floridian. I know the new people were getting laughed at last year. We were calling you the newbies when we saw you walking through Publix with your white tube socks and your sandals. Yes, you were a newbie. We chuckled at you. We saw your license plates and knew you were from out of town. But you made it. You have been christened. You are officially a Floridian. You are one of the pack. You are one of us, and we would be honored and happy to help you if we can. So if you made it through unscathed, congratulations. You dodged a bullet and you were blessed. If you made it through with some damage, congratulations on protecting your family and yourself throughout the storm. And just know that there are people around you that will help you through the next steps. So I know Jen is womanning the hotline. She'll take your information down, and we'll reach out and see if we can't get you in touch with somebody. So that is that. I wanted to get that out of the way because I know a lot of people are waking up today and kind of scratching their head wondering what is next. So speaking of what is next, you hear that music, you know what that means? That is my cue. We'll be back in two very short minutes. We'll dive into the data and we'll start taking your questions right here on the Mr. Mortgage Show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And we sure do appreciate you being with us. We are here every week, right here, same time, same station. Sit tight. We're always happy that you're with us. If you have questions, we encourage them. You can call or text your questions to 855-462-7292. That's 855-462-7292. And I appreciate you letting me kind of wax philosophical about the hurricane. I just realized that, having gone through as many as we've gone through, as me personally, born and raised here, so a lifelong Floridian, it kind of starts to become second nature. But then I think back to, what was it, 04 or 05, where we had the 4 storms in a row. And, I was reliving that experience, and my roof came off the house in one of those storms. And I think it was 04. Hey, maybe Cliff can call Katia Hall and we can double check my dates, because I don't want to give misinformation, but it was either 03 or 04 and then 04 or 05. One of those pairs of years, we had 4 and then 2, and it was quite an active and interesting time. But it just made me realize that a lot of people who don't know what's next are going to find the next couple of weeks truly frustrating. So if we can reach out to those people and, be a shoulder and also a beacon of hope and a resource to give them the information that they need to just be certain about their next steps, I think that would be awesome. So, guys, thanks for indulging me that. Jen, are you ready? What do you say over there?
Let's get this party started.
All right, let's get this party started. Indeed, because I have a tendency to ramble. So, hey, your questions are always my favorite, always the biggest part of the show. We're going to get to those in just a second. But I like to start every show by poking fun at a headline, if you will, or at least uncovering the data behind the headline. In my very favorite reporter on CNBC, Little Miss Red Riding Hood, Diana Olick, who actually I like Diana. She's a really good reporter. I just think that she's drawn the short straw, and she's always putting a negative spin on housing. So she's the anti-Mark at the moment, but I do think she's a quite a professional reporter. But anyway, I'm going to continue to make fun of her only because I like calling her Little Miss Red Riding Hood, but she is a solid reporter. Anyway, her headline says, home prices cooled in July at the fastest rate in the history of the Case-Shiller Index. Whoa, wait a minute. Home prices cooled in July at the fastest rate in the history of the Case-Shiller Index. Guys, Case-Shiller is legitimate. That's a data source a lot of us lean on. They've been around forever, but wait, home prices cooled at the fastest rate ever in the history? That sounds like a hurricane brewing in the housing market to me. This could be the beginning of the end. Is the housing market going to crumble? Is the teeter finally going to totter? Is this what everybody's been waiting for? Well, hold the phone, guys. The very first sentence in the key points underneath that gigantic headline says, the 10-city composite in the index rose 14.9% year over year. down from 17.4 in June. You see what's happening there? The increase year over year went from 17 to 14, but they're still increasing. Prices are still up year over year, even at the fastest rate of cooling in the history of Case-Shiller, 15%. So that means if you were looking at a house last year for 300, it's 345,000 today. That's using their math in Diana's article. So I'm finding it confusing that the headline screams prices cooled in July at the fastest rate in the history of the index, but then when you read it, they're talking about the rate of appreciation is slowing. Prices aren't coming down. Values aren't coming down. The pace at which they're increasing is slowing. And that's a national average. Guys, in our area alone, if you dig deeper in the article, it talks about Miami and Tampa, Tampa and Miami in that order are two of the three hottest markets in the country, Dallas being the third. Tampa increased year over year 31.8%, Miami 31.7%. So that means your $300,000 house is darn near $400,000 this year. And I get it. In Tampa, there might be some deals next week. You might be able to get a discount on a house without a roof. But my point is that headline leads you to believe the end of the world has come. And just like that storm has passed through and is clearing, you are going to be okay. Housing is going to be okay. It's still appreciating by this data set 15% year over year. And I can show you case study after case study on why it still makes sense to buy real estate even in a flat appreciation cycle. And I know that's scary. We can talk about that another time, but I promised we would get to your questions. Jen is over there fidgeting and giving me the stink eye because she's got some questions. So, hey, thanks for your patience. What do we have?
Kimberly is asking, with another big rate hike and the Fed saying more to come, have we reached the beginning of the housing crash?
That's exactly what I was just saying is not going to happen. Kimberly, that's a brilliant question. And I get it. It's super confusing. We see the Federal Reserve swinging at this inflation monster with the only tool that he has in his toolbox left, and that's rate hikes. And he was very adamant in the press conference after raising 3/4 of a point that more rate hikes are to come. Now, the big run-up that we've seen in the last week is not directly related to what the Fed action was. It's more related to the secondary marketed mortgage-backed securities, the inflation pressures in the UK, and the imbalance in the strong dollar to the pound got a lot of press this week. And I'm not going to turn this into economic psychobabble because I promise you I'll be the only one having fun. But I'm sharing all that only because the Federal Reserve's moves are not the only thing and not directly influencing mortgage rates. I share all of that as a partial answer to your question. So I don't think the rate hikes alone are enough to, have the housing market come tumbling down. Interestingly enough, the supply and demand equation is still out of whack. Even at an interest rate in the high 6s, low 7s, there's still more demand for housing than there is supply. And the cost of money alone is not going to do anything to supply. The only thing the cost of money can do is lower demand because it's making the buyer pool smaller and smaller. But you heard me share this last week. I do think the increase in interest rates is also going to have an unattended effect in reducing supply. What do I mean by that? So builders, supply companies, lumber yards, those guys operate on adjustable rate debt. They have lines of credit that they run their companies on. That Federal Reserve overnight rate directly influences the cost of that money. So it got more expensive by 3/4 of a point every time the Fed hikes the rate for those guys to do business. So what's that going to do? That's going to cause those prices to go higher, which might discourage builders from starting more projects because it's now more expensive. Here's another thing. if you're sitting in your house right now and you're happy, you had no damage in the storm, you got a ton of equity, and you have a 3% interest rate or a 2% interest rate, how likely are you to sell that property and then go buy something at 6%? I mean, a lot of people could not sell their house and buy it back right now today because the rate's higher, the price is higher, the insurance is going to be higher, the taxes are going to be higher because the value is going to reset. An additional byproduct of an increasing mortgage rate environment may stifle supply. Unintended, but may stifle supply. And lastly, I think seniors are not selling and downsizing or selling and moving into assisted living nearly at the rate they've done in the past because, my God, seniors are living longer. They're living healthier. They do not want assisted living. They just want the living, and most of them want to do it in the home that they've grown to love and feel secure in. So we're seeing a big uptick in reverse mortgage business because they want to tap that equity to get through this inflationary cycle and stay put. So that's another pressure point on supply. And if you don't think seniors look better and are healthier than ever, I just saw a Facebook post the other day where the actress who played Elvira is 71. My God, she looks 40. She looks amazing. Hey, Greg looks fantastic. You hear him every day on the radio. There's no way that guy's 70. He's 40 years old, hiding in a 70-year-old's body. So I'm sorry. I'm sorry, Greg. But I say that with all love and respect because you, my man, are youthful and you're not slowing down. And that's my point in this. You're not selling and moving to an assisted living. 20 years ago, that was the demographic. But between Greg and Carol and Elvira all looking great and out there living their best lives, I don't think those houses are coming to market anytime soon. And I do think that's an unintended byproduct of the increase in interest rates and the increase in costs. So anyway, I appreciate that question. That's a great one. We're getting a lot of it. And right now, I don't think housing is going to crash. I say that every week, and I try to give you the resources and the data to support that opinion. So thank you for that fantastic question. You hear that music. You know what that means? That's my cue. We'll be back in 2. Sit tight for 2 minutes, and we'll be right back. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back, and my name is Mark Eitel. You're listening to the Mr. Mortgage Show, and you heard the man. If you want your questions on the air right now today, just call or text 855-462-7292. That's 855-462-7292. Jennifer, my producer, will get your questions on the air, 855-462-7292. That is the Anytime hotline. Call or text that number anytime. She'll get you on the air. Or visit the website, mr.mortgage, never, ever, ever.com. Just type in Mr., hit the dot, type in mortgage, hit enter, and watch what happens. We'll pop right up. In the upper right-hand corner of the page is the Contact Us box, and there you'll be able to type in your question, hit submit, and Jen will get you on the air. So I know we've got some questions because I was talking to Jen during the break, and I went a little bit long in that last segment. So what we are going to do is get you a rapid round of questions rolling. I'm going to throw it over to Jen. Hey, Jen, what do you have?
Shelley wants to know, I'd like to sell my house to my daughter and let her take over my existing mortgage. Is this possible?
Hey, Shelley. So that's interesting. So it may be possible if you have an assumable mortgage. It's unlikely, but it may be possible. One thing to consider that a lot of parents are doing when they're faced with this same goal is just selling it outright, having your daughter get her own brand new mortgage, which will get her mortgage credit on her report, which is good, but you can gift the equity. So let's say, just to use round numbers, the property's worth $300,000, and let's say you owe $100,000. You could sell her the property for anything over that $100,000 and gift her the difference. So you could do a $200,000 transaction with a $100,000 gift of equity, and she's not going to have to bring any money to the table. Now, if you want to pull some cash out for yourself, you could sell it to her for $300,000 and give her a gift of equity of, say, I don't know, let's use the same analogy. Give her a gift of equity of $100,000, and then you're going to walk with the difference between that first mortgage of $100,000 and that equity gift. Again, she wouldn't have to have any money out of pocket, and you're transferring the ownership into her name by gifting her the equity. The other strategy will work if your mortgage is assumable, and I'm happy to look at that for you, but that is a great question. We're seeing more and more parents either helping with gift funds for a deposit, or some people are co-signing notes for their children. And then also in this instance, we have parents who are using the gift of equity strategy to provide their adult children an opportunity to home ownership. So love the fact that you want to help your daughter, and hopefully that answers your question. If you need more information, as always, you can reach us during the week. So I appreciate that question, but let's keep it rolling.
Christian sent this. Will you explain the insurance box and how it can delay a closing?
Hey, Christian, that is a great point, and I'm happy to do that. And I do believe I know who that Christian is, because I do believe that is a rockstar insurance broker that I know. But anyway, to answer your question or to address the topic, you can Google this, Google insurance box, and there's a geographic square that's applied over the hurricane zone. And it includes all of Florida and swings out past Bermuda and then down somewhere beneath Cuba and then swings back over. If there's a named storm inside of that box, then the ability to bind a new insurance policy is suspended. Because of the uncertainty of what's going to happen next, the insurance company doesn't want to bind a policy if there's a hurricane 48 hours away that's going to tear the roof off the house. So they suspend binding policies until the named storm exits that box. And during an active hurricane season, you can have one on the way out and another one on the way in, and that's still going to prevent you from binding an insurance policy until everything's out of the box. So Google Florida insurance box and you'll see what I'm talking about. But hey, Christian, that's a great point, and I'm sure it was a big topic of conversation in your world this week, so I appreciate you. Hey, Jen, what else do we have?
Angie's question is, my property taxes more than doubled. I just bought my house 18 months ago, and I filed homestead exemption. I thought filing homestead prevented this. How can this happen?
Hey, Angie. Yeah, this is an interesting one, and it's often misunderstood. And I know The property tax office sends out notices in September, and we usually get a ton of questions about this for this exact reason, because you get a big increase in your property taxes and you're not sure why. Now, you can call the tax assessor's office and they'll walk you through it, but here's what most likely happened and what we see happen often. First, let me explain homestead exemption, right? So there are two parts to homestead exemption. One is called, I think it's called Save Our Homes, SOH. And what that does on your homesteaded property, the amount that your taxes can increase is capped at a percentage. So let's say, for argument's sake, it's 3%. So let's say it's 3%. That means for the life of your ownership, regardless of what's happening in the real estate market, right? We just saw home appreciation almost double in the last 2 years. So by default, taxes are going to double. Well, if your property's homesteaded, that cap under Save Our Homes prevents your taxes from doubling. That's a component of the homestead and filing homestead exemption. You get that. The homestead exemption itself is depending on, widow, disability, married, single. A portion of the taxable value of your property is exempt from taxation. So for round numbers, let's say, you get a $50,000 homestead exemption and your property value is $200,000. You're paying tax on $150,000. So if you are paying tax on $150,000 and you're capped under the Save Our Homes, that's going to slow the increase in taxes over the life of your ownership. Now, that's likely what happened is you bought a property from someone who owned it for a considerable amount of time, and they had homestead exemption, and they benefited from that tax increase cap. Now, when you buy the property, that all resets. That resets at the current market value. So if you bought a property and the taxes were, $1,800, and now you went in there and spent $400,000 on the property, there's a good chance your taxes can be $5,000 or $6,000. And that's what catches a lot of people off guard is they see that tax bill from the previous owner, and that's what's disclosed, but that's not what your taxes are going to be, because they're going to reset on your purchase price, and then they'll deduct your exemption amount and then cap you there. So I hope that helps. I know you were probably looking for the miracle solution on how to get that fixed, but you can always call your local tax assessor's office. Just Google your county and tax collector's office, St. Lucie County Tax Collector, and the local website will pop up. All the contact information will be there. There may be even steps on how to request a reassessment of value. But great question. We get a lot of it this time of year because the trim notices just went out, and everybody's jaw hit the floor when they saw their taxable property value. So, hey, I appreciate that question. You hear the music. That is my cue that we will be back into. Sit tight for 2 minutes. On the other side of this break, we will dive into more of your questions. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are still tuned in to the Mr. Mortgage Show. Thank you so much for spending a little bit of your day with us. We do this each week right here, same time, same station, and super happy to be with you. Give us a call or send a text to 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. When Jennifer and I are not in the studio doing the Mr. Mortgage magic live for you, that pushes to my office. So we will always be able to get to your questions. 855-462-7292. Call or text. You can check out the website at mr.mortgage. Never a .com. Just type in Mr. Hit the little dot. Type in mortgage. Boom. Enter and we'll pop right up. So that was a big enter. Boom. Anyway, we always appreciate your participation. We are going to do a rapid round of questions because Jen showed me the list of questions that are stacked up over there during the break. You guys have been amazing shooting your questions in this week. And hey, Rodney, I read your question. You dirty animal. I'm not reading that on the air. So anyway, I'm going to shoot it over to Jen to keep the questions rolling.
Glenn left a message. Can I co-sign for my son and daughter-in-law's mortgage if I already have a house and a mortgage?
Hey, Glenn, that is a fantastic question. Yes, sir, you can. You are going to be classified as what's considered to be a non-occupying co-borrower. Now, what's going to happen is all of your income and all of your debt, and by all of you, I mean your son, your daughter-in-law, and you, all of the debt and all of the income are going to be calculated. So, yes, you can co-sign, but know that debt-to-income ratio is going to be spread amongst the three of you as borrower, co-borrower, and non-occupying co-borrower. But again, that speaks to an earlier question and a comment that I shared that we are seeing a lot of parents encouraging their children to jump into homeownership. And I have a hunch that some of it has to do with they're tired of loaning their kids money and they want them to start building their own equity. But that's not just the cynic in me. I have had a couple conversations with clients who just said, hey, we want our kids to start that journey into equity wealth accumulation, and we know we got to get them into the homeownership game, and pricing has outpaced their ability to save, so the parents are willing to help the kids. And listen, a lot of people have a ton of equity that they didn't anticipate having, so we're seeing parents taking equity lines and using some of that equity that they've accumulated unexpectedly over this this ramp up period in values and using that as a gift for their children. And you're able to do that as well. So fantastic question. I appreciate it. Let's keep them rolling. Hey, Jen, what else do we have?
Here's a question from Kyle. I read an article saying rates may hit 10%. Do you think this will happen?
Hey, Kyle, if I had a crystal ball, my man, so they could. Absolutely. There are fundamentals that could stack up to push rates to 10. There are also fundamentals that could push rates back down in the high fives. So my answer is I don't know. I think if somebody would have come on the air in January, right, when rates were in the threes, and said, hey, there are fundamentals lining up in this market that can push rates to the high sixes or seven, you guys would throw tomatoes at me and say I was nuts. But the reality is, look how fast that happened. So the same currents and the same undertows that are in the financial environment and in the global economies that pulled us this quickly from 3 to 7 could certainly move us from 7 to 10. I think what's more likely is we kind of bounce around in the 6s to 7s for a while. I do think there's another Federal Reserve move, at least one more, maybe two. in this calendar year. And then we move into the other side of this rate hike environment and see where we go from there. But hey, guys, that's one more reason why, speaking to a point that I mentioned earlier in the show, that's another reason why waiting might not be the best decision, because even if home prices stay flat, right, even though we referenced an article that says they're still up 15% year over year, but let's say they're flat, it's a lot cheaper to buy at 6 than it is at 10, to use this question as an example. And if rates go back down to 4, you can refinance into a 4% rate. But if rates go from 6, 7% to 10, are you able to pull the trigger at 10? So I don't have a crystal ball. I think it's an interesting conversation. It's one I have often. I've got a group of friends who are also armchair economists, and we geek out on the data. And we talk about what would have to happen for this to take place and what would have to happen for that to take place. And this is a conversation that we're having often, but I don't know. There's not a hard and fast answer to that. It's kind of a hold on and see what happens. But I appreciate your question. Hey, Jen, do we have another question?
Rusty is asking, what does a 2-to-1 interest rate buy down mean? Is this like an adjustable rate loan?
Rusty, am I the only one who hears the name Rusty and thinks of, oh my gosh, what was that movie? Jen, help me. Vacation? Wasn't the son's name Rusty? He was always on the verge of getting in trouble, and they tied the grandmother to the roof, and the dog peed on the sandwiches. Does anybody remember that movie? I'm pretty sure the son's name was Rusty. And if you're as old as I am and you've ever ventured down south to the Palm Beach Kennel Club, I do believe they don't race the greyhounds anymore, but I do believe the little stuffed rabbit that ran around the track, the bait, if you will, that encouraged the dogs to race, I do think that was called Rusty also. So anyway, Rusty, don't shoot me. I'm not making fun of your name. It's actually, I've got a good friend, Rusty. I think highly of him. So don't throw rocks at my car when I drive by. I'm not making fun of you. I just, I have a tendency to drift off because I think in pictures, and when I heard your name, it made me think of that. But to answer Rusty's question, which I've almost forgot, but a 2-1 interest rate buy down. Okay, there's a lot of conversation right now, and we're having it every day, about sellers who are willing to either lower their asking price or contribute money towards the buyer's closing costs, or in this case, interest rate buy down. So there are many buy down strategies, one of which is the 2-1 buy down. Another is 3-2-1 buy down. And basically what that means is the seller or the builder is providing the money necessary upfront to buy the interest rate down from, let's just use round numbers. Let's say 7%, right? The rates touched 7 earlier this week. That's why I'm using that number. They're back into the high 6s. But anyway, if the start rate was 7%, you could buy it down to 5 for the first year. Then it's going to go to 6 for the second year, and then it moves to 7 and stays there for the rest of the loan. Now, what's different about that is, from an adjustable rate loan, is that adjustable rate loan resets at a fixed period of time indefinitely. So you could have a 3-1 ARM, right? A 3-1 adjustable rate mortgage, which means it's fixed for the first 3 years and then adjusts every year thereafter. Some of them adjust every 6 months. So with the 2-1 buy down strategy, you're lowering your monthly payments for the first 2 years, and then you're going to, the 7% rate. The upside to that is if interest rates go down, you can refinance into a lower fixed rate for a new loan term. The downside is that ultimately you're going to move back to that 7% rate, and you have to be qualified at 7%, even though your start rate is 5. So there's a ton of conversation around that. There are a lot of moving parts and more detail to it, and I'm happy to walk you through it off the air, and I encourage you to give me a call. But the second buy down strategy we're seeing a lot of is a permanent buy down. So you're buying the rate from, say, 7% to 6%, but it starts at 6% and stays there for the life of the loan. So there's no increase in interest rate and no increase in payment in the future. So those are the two buy down strategies that are getting a lot of conversation right now. These are old strategies that we used to use quite often in in a prior life, if you will, and they haven't been in vogue for a long time because rates have been low and stable. And then we dipped into this unhealthy, 2 and 3% interest rate environment. But now that we've moved back up so quickly, people are starting to look to these alternative strategies. And lastly, the 3-2-1 buy down works the same as the 2-1. You buy the rate down 3% the first year, 2% the second, 1% the third, and then it resets and stays the same. So great question, Rusty. I appreciate that. I hope that information helps, and I'm happy to dive deep with you off the air if you'd like more information about that. But hey, thank you so much for sending us that one. Yeah, we're getting a lot of questions regarding that, and I'm happy to go into more detail about it. So I appreciate you. Hey, you hear that music? That is my cue. We'll be back in 2. Sit tight for 2 minutes. On the other side of this break, we're going to take your questions and continue the show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you heard the man, 855-462-7292. That's the Anytime hotline. You can call or text that number. Call or text 855-462-7292. That's how you get your questions on the air. And hey, speaking of your questions, I know Jennifer has more over there. So let me throw it to Jen and squeeze in a couple more questions.
Pete is asking, I've been listening to a few of your podcast shows. They're pretty good. You talked about a reverse mortgage for buying a home. How does this work? Oh, yeah. I like Jen better than Don. Thanks, Pete.
Yeah. Thanks, Pete. Jen, was that a plant? Hey, I kind of think highly of Jen too. So, Don is actually it's Dom. He's my producer on the other, radio show that we do each week. So if you're curious to hear for yourself, if you like Jen better than Dom, check out MrMortgageRadio.com. That's the podcast page. All the previous radio shows, all of the podcasts go up there every week. I think there's 75 or 76 up there now, so quite an extensive library. But hey, Pete, thank you for that. Thank you for your kind words, and I agree. I like Jen too. So great question. This is a big subject, so I'm going to just kind of broad stroke it, and if you want to dive deeper, we can. But so a lot of people know what a reverse mortgage is. They don't know the details of it, but they get it, right? You have equity in your house, you do a reverse mortgage that pulls the equity out. You can live off that equity and you never have to make a monthly mortgage payment. And people understand that conceptually. but there is a strategy that allows you to use a reverse mortgage for a purchase. And I'm going to share a scenario that might better explain it than me just kind of doing a mumbo jumbo thing here. So I have a client, and she lives in the home she raised her family in. It's just her now. Her husband's passed. And the property's worth $500,000, and she owns it free and clear. It's too much house, too much maintenance. It's burdensome to her, but that's the family home. And she doesn't want to sell it and go buy something else because she doesn't want a monthly payment. And she's uncertain what her right move is. There's a new neighborhood around the corner, 55 plus neighborhood, cool neighborhood, pickleball, the bus to Whole Foods, all of the community resources she'd like to be a part of, right? She could sell her, and ironically enough, those units in that neighborhood are going for $500,000. So she could sell her home, and, just round numbers for conversation's sake, this isn't an exact scenario. She sells her house, she has $500,000, right? She doesn't want to put it down on a new house because she likes the idea of having some money. So I don't really want a mortgage because I'm on a fixed income and I don't want to make a bunch of payments. She could put $250,000 down on the new house, put $250,000 in the bank, and take a reverse mortgage. And now she's sold the big house, moved into the neighborhood she always wanted to. She put $250,000 in the bank, and she never has a monthly mortgage payment. That is how a reverse to purchase works. And I'm happy to go in to the fine points in all of the details. But that's a pretty good overview of it as a scenario. So I appreciate that question. Hey, while I'm thinking about it, it's been a crappy week for a lot of people. We dealt with the storm. But guys, we have an awesome thing coming up this weekend. Sunday, we have the Purple Cow Poker Run benefiting Molly's House. We talk about it all the time. Jen, do me a favor and read that Molly's House flyer to the people, would you? Yep. Yeah, thanks.
Sure thing, Mark. Join us Sunday, October 2nd, for Wayne Sloat's first annual Purple Cow Poker Run, benefiting Molly's House. The address is 430 Southeast Osceola Street, Stuart. Live music with our own Switchin' Whiskey. For more information, please contact Katie at Molly's House, 772-223-6659.
That's right, guys. Molly's House, the fundraiser that we've talked about all month, is coming up this Sunday. We're going to get the bikes out. There'll be some old cars, food truck. If you haven't ever heard Switchin' Whiskey, they're an awesome local rock band. It's going to be a good time. It's in honor of Wayne Sloat, who recently passed, but all of the proceeds benefit Molly's House, as that was a charity close to his heart. So we encourage you to be a part of it. We're super excited to be a part of it. And we're looking forward to it. The weather's supposed to be nice, so let's go out there and do some good, and we encourage you to join us. But appreciate that, Jen. Hey, listen, guys, we're at my favorite part of the show. I'm going to ask you for a favor. If you found any of this valuable, interesting, insightful, and you think you know somebody, a family member, a friend, a coworker, heck, that obnoxious guy at Publix who's always seems to be in front of you when you're trying to check out, and you hear him talking about mortgages or real estate, is it a good time to buy? Is it a good time to sell? Please introduce them to the show. I would love to answer their question. We're always trying to grow the audience. If you want to check out back episodes and share those, you can do it just like Pete did, checking out MrMortgageRadio.com. That's Mr. Mortgage Radio. Or you can find us online at Mr.Mortgage.com. Just Mr.Mortgage. But super excited for what's coming up this weekend. And looking forward to seeing everybody and having you be a part of it. Hey, Jen, say goodbye to the folks.
I hope I get to see you this Sunday. Have a great week.
Have a great week indeed. All right, you hear the music, you know what that means? Man, we made it through another show. Where does the time go? Man, I love spending this hour with you each week. Thank you so much for your questions, for your participation. And remember, go out there and be a beacon to your community. If somebody needs some help with some hurricane advice, share your knowledge with them. And if you know somebody who could benefit from the show, share that too. So super excited. You know what that means, though? That music means we've wrapped up another week. Jen and I will be back here next week. Same time, same station. But if you need us during the week, check out Mr.Mortgage, never.com. Just type in Mr.Mortgage and the answer to all your prayers will be found.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.